You doing?
Yeah, no, for sure. Yeah, thanks for being here, Will. This topic has been coming up because there's a lot of confusion, right? What's happening in 2020? What's 2021? What about 2022? I heard there's the child tax credit got bumped up. What if I own a business? What if I'm an entrepreneur and I got COVID? Is there a credit? What's up with the Teslas, right? With the renewable energy. There's rumors that this new administration is really going to focus on renewable energy and they're going to encourage people to buy solar panels, electric cars through the tax code. And that seems to be the case that well, I was seeing an article once that said the way they structure the tax code is in a way to motivate certain behaviors, right? To encourage certain behaviors. What do you say that's the case, though?
Oh, absolutely. I mean, you know, for years the IRS kind of brings changes, credits, deductions, whatever they think is right for the times, right? And right now you're seeing that big time when in the form of stimulus checks, right? So they're stimulating the economy. They're able to do that with the control they have in terms of taxation and giving people stimulus. And quite frankly, in a couple of years, most probably taking them back or increasing the tax rate to make up for that money. But absolutely, it's a very big part of the economy and how they try to control it, for sure.
Yeah, definitely. You know, with that said, I think everybody's excited. Let's hop right into the top tax credits of 2021.
Let's do it. Let's do it. So first thing I want to talk to you guys about is this. I'm not sure if I see everyone who's here or not, but if you have a question, just put it in there, and Tony will help me out. I'll follow up with your questions at the end of our session, or at least I'll try. But the first thing is a little bit of ground rules, right? Some ground rules. We want to talk about the 3Ds, right? And not for you lawyers. I know you guys are thinking, death, dismemberment, and dissolution. No, that's not my 3Ds. My 3Ds start with legal disclaimer, right? Everybody's taxes are different. Okay, the tax code is applied to individuals and businesses, and generally speaking, they're all different. So everything that I say today, you really, really should do one of two things. You either should talk to your tax professional and see if you qualify, or do a little bit of the second D, right? Which is a deep dive into these credits that may or may not apply to you. But the most important thing is that we're going to work into the third D, which is today we're going to discover tax credits, right? I want you guys to know that these tax credits are out there. They may or may not apply to you, but they may apply to you. They may apply to family. They may apply to friends. They may apply to friends and families in their business. So it's important to discover that these tax credits are out there so that you know if you qualify or if you don't, right? We're going to talk tonight for about 30 minutes, and I'm going to basically give you my top 5 to 7 personal tax credits and my top 5 business tax credits. And I'm going to give you some secrets as well, maybe some breaking news that you guys may not be aware of, right? So that being said, Tony, you want to start with something? This is Tony Martinez, by the way. He is the founder and CEO of Negozi. We'll let him talk a little bit later after the show so that everybody knows what Negozi is, doing awesome things for the immigrant, Latin, and small business community. So let me get started. First and foremost, very important, just yesterday, IRS claimed that they put out 25 million more stimulus payments. 25 million payments went out yesterday. So if you saw money in your account or you got a check in the mail today or tomorrow, you know why that 5th round or whatever of the stimulus credit went out yesterday, right? Now, that being said, the entire stimulus project, right? If I could see you guys, I would put like a little contest here to see if you guys know what that number is. But I'm just going to give it to you guys. $372 billion have been paid in stimulus for the 2020-21 tax year. There's going to be obviously be more. We'll talk a little bit about that, but that's the number. Now, let me give you some comparison, right? The IRS every year pays out $450 billion in refunds, right? So generally speaking, as of today, the IRS has given out more or less the same that they do on a regular yearly tax season for them in stimulus, right? Now, let me give you a little bit more perspective, right? Because you're not going to know what $450 billion is or $372 billion is unless you can compare it to something, right? So the IRS collects in income tax and payroll taxes $4 trillion, guys. $4 trillion every year. So that's kind of the numbers of where we're at. Just want to let you guys know. And I'm going to start with the top tax credit that I think is super valuable, especially for kind of the age group that we're in. I think a lot of my friends, my family, my group they have families, they have cars, they have houses and all of that, right? So let's talk about number one. The first one is what I like to call the energy property credit, guys. Energy property credit. More importantly, we're talking about solar panels. If you bought solar panels either this year or last year, right? This year, obviously, you're gonna have to put it in for next year's taxes, but the value of the solar panel credit could be as much as 26% of what the solar panels cost you, right? So if you paid $10,000 for solar panels, that's $2,600, okay? If you paid 20 grand for it, could be over $5,000, right? Now, a funny thing about this tax credit, it's going to go away in 36 months, I believe. It's between 24 and 36 months, it's gone. And every year, it's a sliding scale, right? So 26% this year of what the cost is. Next year, it's gonna be less. Talking about 23%. And the following year, it's gonna be less. So if you're gonna buy solar panels for your house, sooner than later is better because it's eventually gonna go away, okay? And that could be worth as much as 26% of your spend, which is super important. Now, that doesn't include your state, guys. The state that you live in may or may not have a large credit, right? I know there's one in New York and there's others. Check with your state because there's another credit involved there and it varies by state, all right? So don't forget when you're gonna buy something for your house and it's solar energy related, 26% of the purchase price. So number two, for your personal, number two. Another electric purchase, right? If you purchase an electric car, right? A lot of us are buying electric cars these days. I know that's my next purchase. I want to look for a car that's electric. I don't know which one, who knows? But I think it's going to be electric, right? Who the heck wants to drive with gas these days? But anyway. All right, so if you buy an electric car, we're talking about $7,500 if you bought one in 2020, $7,500 in credit, in a tax credit. Now, let me back up a little bit so that you guys really understand. A tax credit, okay, is not a tax deduction, and it is not, okay, a tax adjustment. Okay, let's know the difference because this is super, super important, all right? A tax credit is the best type of credit you could find to benefit you, either you or your business. Why? Because I'll give you an example. If you have a tax liability, meaning they did your taxes, they did them, and you owe $10,000, bag, you owe $10,000. Then you're going to tell your accountant, what can you do? You need to do something. And he's going to say, oh, maybe I'll find you a deduction. Whoa, a deduction. No, whoa. I don't want you to find me a deduction, tax man. I want you to find me a tax credit, right? Why? Because let's just say he didn't ask you that you bought an electric car. He didn't ask you. And you say, I bought an electric car. And there's a $7,500 tax credit when you buy an electric car. Guess what? Your tax liability goes down by that much. it goes down by $7,500, meaning your tax liability is now going to be $2,500, right? That's why these tax credits are so important. It is not a tax deduction or an adjustment. It works differently, right? While a deduction helps, all that's doing is reducing your taxable income. Adjustments also reducing your gross income, but not as good as a tax credit.
And that's interesting. I was going to say, well, that's interesting because people pay taxes on taxable income. Your tax rate is based on taxable income, not on your total income. A lot of people say, right. Oh, I made 100 grand this year. Man, I got to pay 30%. Like, no, maybe that's your gross income. But the first goal is to reduce your taxable income. Then the tax rate is applied to that number. And then hopefully a credit eats up the tax that you calculated that you owe.
That's right. That's right. Good framing. I like that. All right, let's go to the next one. All right. So y'all know about the tax credit for solar panels, and you know the one for the plug-in vehicles, the electric vehicles. All right, let's go back, talk about something a little bit more serious, right? A little bit more serious. Adoption. Super important, guys. Adoption, right? The country wants, the federal government wants, the state government wants responsible people to obviously take on adoption if that's something that they want to do, right? So they're going to try and make it as easy as possible for folks to adopt children. Okay. So that being said, if you have that in mind, please know that there's a tax credit worth $14,300, up to $14,300. Okay. So how does that work, right? So when you go through an adoption, you're going to go through an adoption application, and agencies are going to try and find you and pair you up with a child, right? All of that costs money, right? You got court costs, you got attorney costs, you got travel expenses, meals, and you got any other expenses that are associated for the legal adoption process, okay? Now, let's say you start to do that this year, right? You start to do that this year and you spend $14,300 this year, 2021. The IRS is going to allow you to take those expenses as a credit next year in your 2021 taxes, right? On the taxes for the 2021 year in 2022, okay? Now, keep this in mind, super, super important. Even if the adoption is never finalized, if you go through the process and for whatever reason, you're not able to locate or pair up with an adopted child, you still get that credit, right? So it's really the intention of adopting, okay? So that's how it works for a for a domestic adoption, right? If you adopt on a foreign adoption, unfortunately, it does have to become final, and you're able to take those deductions when it becomes final. So if it's domestic, you're able to take $14,300 even before it's finalized. Even if it's not finalized, if it's a foreign adoption, they allow you to take the same $14,300, but it must be final. All right.
Nice.
Yeah, man. That helps people that, they may want to adopt. They don't have the costs associated with adopting, which is, a big thing. So let's see who's here. Hector's here. What's up, Hector? How you doing? Who else is here? Let me see. Oh, I see him now. What's up, Mo? Mo is here. What's up, Mo? Fatima's here. All right.
Shout out to the homies. Everybody's listening.
Let me stay focused because I haven't socialized in a while, man. This is like my socialization. All right. Let's move on. What do we have here? Let's move on to more basic tax credits that you guys know of, right? But you may or may not have actually asked about it, right? Let's talk about the recovery rebate credit. Super important, guys. Recovery rebate. Everybody, where's my stimulus check? Where's my stimulus check? I didn't get my stimulus check. I didn't get one for my mom, who's my dependent. I didn't get one for my child. My child didn't get one, and she is a student. but she works for all this stuff. So hit the brakes. There is a recovery rebate credit, guys, and it's also going to be there for next year, and that is for 2020 and for 2021. In the tax return, line number 30, they are asking you, they're calculating based on your 2020 taxes what your stimulus payments were supposed to be, right? So they'll ask you, all right, you were supposed to get 600 and you were supposed to get 1,200. They calculate it for you right there. And then they ask you, how much did you get? So if you put in A, I got 0. And I didn't get the 1,200 either. I didn't get anything. Guess what? On the 2020 tax return, you're going to get your money, right? Which is pretty cool. Same thing in 2021, okay? In 2021, you're going to go ahead and, thank you, Tony, I appreciate that. You're going to go ahead and do your 2021 taxes. And it's going to ask, and it's going to say, hey, you were supposed to get $1,400 per child, and you were supposed to get $3,600 for all your children that were under 6. I'm gonna mention that a little bit more later. What did you get? They're gonna ask, right? On line 30, and then your tax professional is gonna have to put it in whether you got it or didn't. If you got it, we're good, right? If you did not get it, you'll get it on the tax return. All right. So if you have any issues with your rebates, that's the way you should go about it. You really should just talk to your tax pro to see if you can get it via the recovery rebate, or take your chances, guys, and call the IRS. Me and Tony both know that the IRS last week got over 1,000 calls per second. Tony, yes or no?
Yeah, 1,500 calls, 1,500, 1,500 calls now. Well, 1,500, 3,000, 4,500. It just keeps going.
There you go. And that's what happens when you have 90 million taxpayers, right? Trying to do their taxes.
Yeah.
Maybe even a little more.
Demanding their money, right? Crazy.
So that was number 3, the recovery rebate credit, guys. The recovery rebate credit. Don't forget about that one. Super important. All right. Let's see what else.
Yeah, there's actually 140 million taxpayers.
Look at that. Even more now. Wow. Over 300 million Americans, 140 million taxpayers nationwide. That's a lot of phone calls, guys. So know what you're doing with the recovery rebate if you didn't get it. All right? So iron this out a little bit instead of calling them. All right, guys. Let's talk about another very, very common one, which is the American Opportunity Credit and the Lifetime Learning Credit. That is when your children are going to school, or when you yourself are going to school. Super important, right? Because the child tax credit turns off at the age of 17, right? So 16 and down, you get the $2,000 for your child if they're 16 and younger. If they are 17 and in college and you're paying for tuition and expenses, you don't necessarily need that 1098-T form to qualify for the American Opportunity Credit, although you do need it for the Lifetime Learning Credit. I'll explain the differences now. The American Opportunity Credit is going to allow you $2,500 per student. Okay, super cool. And they allow you to write off, so to speak, or use as expenses. Okay, books, class, tuition, travel, all of that stuff works when you are doing the American Opportunity Credit, okay? And no 1098-T is needed, guys. So that's a super, super important thing when you have a child in school, right? Now you have the other one, which is called the Lifetime Learning Credit, more for regular adults that are going to school, and there's a credit there, right? That credit is worth $2,000. $2,000 for the Lifetime Learning Credit. That is when you yourself or your spouse is going to school, right? The credit is worth 20% of the first $10,000 that a person spends on higher education. Okay, 20%. On that one, you do need to pay the tuition. It's not for all expenses, travel, all that stuff. It's actually for the payments that are made to the institution, right? And there are income limits, unfortunately. If you make more than $69,000 and you're single, you're not going to qualify. If you're married and you make more than $138,000, you're not going to qualify, right? But still, we're discovering, right? So you guys got to know that the American Opportunity Credit for your children that are going to school and the Lifetime Learning Credit for either your children or yourselves that are going to higher learning situations, that exists. And that's worth pretty good money, $2,500 per student and up to $2,000 for your adults, Cool. When's the last time you went to school, Tony? You remember going back to college?
Yeah, I guess what, 2010 for my bachelor's.
I'm not even going to say it because I don't want to age myself.
Yeah, but I'm always learning. There's so many like online courses now, and maybe that's a good question for you. If you take an online course, $300, could you deduct that if you're an entrepreneur, if you're a small business and you want to learn about like machine learning, AI algorithms to boost up your business and go global? Could you write that off?
Generally speaking, yes, for the American Opportunity Credit and the Lifetime Learning Credit, and definitely if you're an independent contractor. If you're an independent contractor and you're spending that money, okay, on trying to generate and learn, right, in your business, you can go ahead and write that off there. Absolutely. It has to be reasonable. The general rule, guys, when writing things off and you're an independent contractor, not as a W-2, right, as an independent contractor, is that the expenses have to be reasonable, ordinary, and necessary, right? So that's the guy, we usually call that RON, right? Reasonable, ordinary, and necessary. So if it's reasonable, ordinary, and necessary expenses in order to generate revenue, you're okay, right?
Got it. That works.
Cool, man. Now, let's see next. What do we have here? The child tax credit, guys. You guys are all pretty much familiar, but there's some new stuff for 2021. Important. The child tax credit is $2,000 per child, okay? And you have to have at least $2,500 in income to qualify. It's $2,000 per child. Any child under the age of 17 that you are caring for, right? It's $2,000. On top of that, all right, and I don't want to get too deep into it, but there's a refundable credit and a non-refundable credit. So the non-refundable credit is $2,000 per child. If you end up not having any tax liability, then it becomes a refundable tax credit, which means even though you don't owe taxes, you're still going to get up to $1,400 per child. All right. That's a little bit complicated, but just know there are two types of credits, refundable and non-refundable. If you have a child under the age of 17, you're going to get $2,000. Okay. And if you end up not having any more tax liability, you still get that money up to $1,400. All right. Now, important with the tax credits for children, it went up. The 2021 tax credit for a child, and it changed as well. Under 6, okay? Under 6 is $3,600 per child for 2021. $3,600 per child in 2021, okay? Now, if you got child over the age of 6, they're going to give you $3,000 per child for the 2021 tax year, okay? For the 2021 tax year. Now, the IRS is talking about breaking that up two ways. They want to take 50% of it and give it to you this year in advance. All right, they're talking about monthly payments starting in July, or maybe they'll send you a check. We don't know yet, right? They're talking about giving you 50% this year and then 50% next year when you do your 2021 taxes, right? And then if all that gets messed up, then you're going to have to put it into the recovery rebate, right? Or you just calculate it next year and you'll get it, because remember, that new tax credit worth $3,600 for children under 6 and $3,000 for children over 6 is a 2021 tax credit. But they're trying to stimulate the economy by giving it to you in advance, which is cool, understood, but that's what it is. All right.
Do you think, Will, on that, that people are going to get their money ahead of time? They're going to go get their taxes done. Then they're going to see, wait, why is my refund lower this year? What happened? And it's because they got half of it advanced. It's one of those things where you don't really feel it. It's kind of ahead of time.
Right.
but then you expect a certain refund, right? I don't know. Do you anticipate people getting upset or just those conversations happening during tax season?
I'm sure they are. I'm sure they are. But at least, you know, it's a lot of money. You know, $3,600 and $3,000 is a lot of money. So they're giving you $1,500 or, you know, almost $1,750 in advance. So the next year you're gonna get the $1,750 again. It's gonna kind of be what they're used to, Tony, because they're used to getting $2,000, right, per child.
Well, yeah, because it also went up, of course. Yeah,
Right.
that makes sense.
Right. So I think it's gonna be okay. It's gonna do its job with stimulating people that have children.
Yeah. Okay. Nice. Nice. So what I'm hearing throughout this, conversation is, like you said in the beginning, depending on your situation, like, do you have children? Are you planning to invest in solar panels? Are you planning to adopt? So it's interesting that's why everybody's tax situation is different, because some people are entrepreneurs, some people are employees, some people have families, others don't. So yeah, thanks for covering all these different ones.
For sure. Some new people join. What's up, Alex? Alex, what's going on in Miami, Florida? I think it's Fort Lauderdale. What's up? Cano Gonzalez is saying hello. He's also in Florida. And we have Deb. What's up, Deb? Deb is also down in I believe she's in Ohio, or the cheese state, right? What's the cheese state?
Cheese state is that Wisconsin? Yeah,
Wisconsin.
Right?
That's where Deb is. Deb is in Wisconsin. What's up, Deb?
These heads.
All right. So we're nationwide now. That's pretty cool. All right. So we talked a lot about the panels for your home, right? That could be worth a lot of money. 26% of the price could be a tax credit. We talked about your plug-in car, electric vehicle, $7,500. Everybody knows why tax credits are so important, because they reduce your tax liability 1-for-1. We talked about the child tax credit, $3,600 per child under 6 and $3,000 over 6. That's a 2021 credit. All right. I'm going to give you two more very, very important ones, super important ones that if you don't know, you need to ask. We talked about the adoption credit, by the way. Super important, guys. Super important. All you guys ready? I think I'm going to put money in a lot of Uber drivers' pockets, okay? And a lot of DoorDash, a lot of you gig economy people. All right. What's up, Fran? How you doing? What up, C-Dogs? Happy birthday. And I'm not going to mention what age you are, baby pop. Happy birthday, C-Dogs. Anyway, we can wave to you. What up, Chris? Chris, what's going on? New Jersey. Chris is up in New Jersey. Calabrese. What's up? All right. For all you gig economy people, super important. Not a lot of people know about this one. And if you did your taxes already, talk to your tax guy and see if you could amend them, because it's that important. All right. So the credit for sick leave or family leave, they came up with this for the 2020 year. Okay. So what's happening is, if you were affected by the coronavirus, okay, if you got the coronavirus and you couldn't work, right? Or if a family member got coronavirus and you needed to give them care, you couldn't go to work because you had to take care of your family member, right? Well, what are you going to do? You're going to try and go for unemployment. Maybe that didn't work. Well, they came up with what they call the credit for sick and family leave, right? On form 7202. You ready for this? It's $15,110 per taxpayer. If your wife is also a gig economy independent contractor, then it's over $30,000 that you could claim via form 7202 if you were an independent contractor who could not work because you got the coronavirus, or because somebody in your family got the coronavirus and you had to care for them. Guys, it's 1040. It's in your 1040 file, right? On Schedule 3, line 12B, okay? Schedule 3, line 12B. Super important for all you gig economy people. Katie, what's up? How you doing? Hello. Gaston Buse is in the house. My man from Queens College. Right fielder from Queens College. What's up, Gaston? All right, super important. If you are, remember, 7202, credit for sick leave and family leave. If you were affected by the coronavirus and you are an independent contractor, like an Uber driver or a Lyft driver, or maybe It doesn't really matter what you were doing. You could put in for up to $15,110 to get back, okay? And your wife as well. That's over 30 grand. Okay, talk to your tax pro about this. There are rules with this. There's no double dipping with it. There's a whole thing with unemployment. But again, we're discovering in this session, and if you need to discover that this does exist if you are an independent contractor. Okay? Cool. All right, now let me give you one more on the personal side, and then we're gonna move on to businesses, guys. Businesses. I have a funny one. Actually, I have a couple more. I say 5, there's so many more. What's up, Anna? ¿Cómo estás?
Hola, Ana has joined aquí en vivo con nosotros en el Zoom. Cool. Go ahead, Will. Go ahead.
Good. She's working. Anna's probably a tax pro working, and she joined us today. Qué bien, mira qué bien. Hola, Ana.
Yeah, I think she could hear us. So she's connecting her audio. Ooh. Go ahead, Will. It's all good. Cool. Okay. Creo que nos escucha, Ana. ¿Cómo están? ¿Nos puede escuchar? Nope, not yet. Go ahead.
All right, we'll get to Anna later. So another thing, guys, super important. This is funny, and this is not all that important, but this is funny. There's a credit out there for people that got Olympic medals. Is there anybody in the crew that got an Olympic medal? I never got an Olympic. How about you, Tony? You got an Olympic medal?
Nah, man.
You got an Olympic medal over there? Anybody? No, nobody got an Olympic medal. But this is interesting. I'll tell you why. All right, so in addition to representing your country, winning an Olympic medal can get you a tax deduction. This is not a credit. This is a deduction, right? Works a little bit differently. You want a credit, but deduction is the second best. The value of the medals that you receive from the United States Olympic and Paralympic Committee and prize money you earn in the Olympics may be deductible. Check Schedule 1 for the deduction. This is really funny to me because everyone knows that I love baseball, right? So this is going back to an old story with Barry Bonds. So here's what they're saying is, if you go out and you win an Olympic medal, that medal could be gold, could be silver, could be bronze. It's valuable. It has a lot of value, right? So what happens with the IRS is if you receive something of value, it doesn't have to be cash. If you earned it and you get gold, or you get bronze, or you get silver, technically speaking, that's considered income. So they created that rule to say, hey, if you win an Olympic medal, don't worry about it. Keep it, right? Deduct it out of your income. You're not going to have to pay taxes on it, right? The funny portion of this is this. Barry Bonds once hit his 500th home run, okay? And a fan came back with the ball to give it to Barry Bonds, right? And this may be a folk tale or whatever, but this is interesting to tax pros at least. Barry Bonds gave it back. And the reason Barry Bonds gave it back is because when Barry Bonds keeps that ball, whatever the value of that ball is, he's getting taxed on it. There is no deduction for the 500th home run ball of Barry Bonds. So I thought that was pretty interesting, but I'm a baseball geek. What can I tell you? What do you think?
Yeah. No, hey, talking about baseball, our friend Roberto Pons is on here. He dice saludos, and he said, Roberto Pons from Miami.
Who else is on there that I can't see?
Yeah, Angela Delgado.
Angela.
Rosie Maravilla, Maribel de la Rosa. These are the people on Facebook that left a comment. And then we have about 20 people on YouTube right now live that are saying saludos, Maria. But you have here Roberto, what did he say? He was saying, since Will is holding a baseball, the Mets robbed the Marlins about a few minutes ago.
Oh, FYI. Thank you very much, Roberto. Always with the interesting comments. But let me show you something. I'm a Yankee fan, my friend. I'm a Yankee fan. Even though I'm from Queens, I'm a Yankee fan. But I love the Mets too. And very interesting, Roberto. Out of Florida, right?
Yeah. He's out of Miami, so Florida. Yeah, the Marlins are in Florida. So.
All right, let's move on. I thought that was interesting. All right, cool. Now we talked about, all right, so another thing, discovery, right? Super discovery. Anyone on this call or anyone who has family and friends that applied for Obamacare and has health insurance through Obamacare. This is super breaking news. I don't even have all the details, and it is quite complex. But you qualify for a premium tax credit, and they redid that entire premium tax credit. So what does that mean? You're not going to learn it today. You're going to discover it today. If you have Obamacare, you need to run, don't walk, run to your tax pro and make sure that they know how to deal with this new premium tax credit, because it can be worth a ton of money if you do it right and if you had Obamacare in the past. Okay, super important, super important. The premium, it's called the premium tax credit adjustment. All right, and then lastly, I want to mention to you guys, super cool is, you remember when President Trump became president and did the whole sweeping changes, right? One of the things that went away, right? It didn't go away, but one of the things he capped what we call the SALT deduction, the state and local tax deduction. You remember that, Tony? Which means, especially for my New York people, it was crazy. All of a sudden, you could not write off more than $10,000 of state and local taxes. That's insane. That was really bad. That was like un castigo that he did for all the New York people because we didn't really vote for him, right? So he was like, let's screw them real good, because $10,000 in New York in state and local taxes, your child is probably paying that with his with his little part-time job, right? And then you put in a house, all of a sudden you just lost $30,000 of tax credit because they minimized that. So guess what? It's looking like that's going to be repealed. Get it out of there, repeal that. That's a silly, silly thing, okay? So that's going to go away, right? It's looking like it's going to go away. You heard it here. You know, it's not a fact yet, but they're looking to repeal that SALT $10,000 cap, right? So you may be able to write that off, even though, generally speaking, guys, the country should be ready for taxes to go up, not down, right? With this new administration, unfortunately, with everything that has happened, maybe not now, maybe not in the near future, but it's gonna go up. So it'll be nice if that gets repealed, so that kind of gets evened out, right? And across, so far, what I'm hearing, Chris has a little question, is for New York so far. So far, we'll see if it's done at the federal level though, which would be nice, which means any state. We'll see. Keep an eye out for that, Chris. All right, hold on just a minute. Let me just say hello to somebody. All right, cool. All right, we're moving on to businesses, guys. For you guys that have businesses, or maybe you have family members that have businesses, super, super important, right? You got to know what's going on. You got to try to have a good tax guy, and most important for your business, you got to really plan. It's more important for you to tax plan when you have a business than to do anything else, because what happens is in a business, it doesn't work like it does when you're an employee. When you're an employee, they have withholdings, right? So throughout the year, at least they are getting some, the IRS and the states are at least getting some of that tax money. But when you have a business, it is on the business owner to really withhold for himself in the form of estimated payments, right? And that gets a little bit complicated, right? So the best thing to do as a business owner is really get through a tax planning exercise to understand your specific situation. I cannot stress that enough. If you're going to go down a business, you want to understand how you're going to be structured first, right? You can be an LLC, you could be a PLLC, you could be a single member LLC, you could be a multiple member LLC, you could be an S Corp, you could be a C Corp. Oh, a lot of stuff, right? All of them have different legal ramifications. All of them have different tax ramifications. So Juan Carlos Nunez from Be More, baby. What's going on? How are you? Juan Carlos owns a market over there, a big supermarket called the Omega Supermarket down in Baltimore. He is probably he is my oldest friend today. Juan J.C. Nunez doing big things in Be More. Also, he's a up and coming local advocate, right? So he does a lot of things for advocacy around his local neighborhood. What's up, JC? How you doing? All right. We're going to talk businesses. And you came at a good time, Juan, because I know you have your business thing going in B-More. Super important. Your tax accountant needs to hear from you the words Form 3800. So you got to say, hey, Mr. CPA, hey, Mr. Tax Guy, I know you're going to do my business taxes, and I know I have a business. I need to know whether I qualify for anything on Form 3800. 3800 has a bunch of general business tax credits that could really help you, right? And they're literally right there. All you have to do is ask and see if you qualify. That doesn't cost you anything, right? We're gonna go through some of them in detail that show up on the 3800, and we're gonna go through others that show up on other forms like the 8882 and the 8974. All right, we're talking business tax credits, super important. The most important thing you have to ask your tax accountant is, do I qualify for anything on Form 3800? Those are all the general business tax credits that you may or may not qualify for, but we're gonna go over at least 5 of them right now. All right, number 1, the credit for employer-provided child care facilities. Did you guys know that if you have a business, okay, and you allow or you build child care facilities in your business, right? That's actually interesting because I've had large offices where I've had space to do this, okay? The IRS allows for you to deduct, to take a tax credit of 10% of the expenditure, ready for this? Up to $150,000. I know I'd rather build a child care facility in my business rather than pay $150,000 of taxes, right? So that's pretty cool. 10% of your child care resources and referral expenditures up to $150,000 a year. You look for Form 8882 on that one. Not everybody has a business that's that large, but maybe some people do, you know? Who knows? All right. What's up, Mike? How are you? My man, Michael Mule, also from Queens College Baseball. Nice to see you. An up-and-coming weather guy, that guy. I like it. I watch his stuff all the time, Mike Mule. All right, super important, right? So that one is worth up to $150,000. Good?
Yeah. It's pretty cool because I was going to say, see, the fact that we're going over this, right? That's the idea. If you have a business, we want you to scale. We want you to be big enough, right? For it, where it makes sense. You have a childcare facility in your building, in your enterprise for your team. That's why I love the fact that you're kind of going over everything, because the idea is for you to be organized, for you to, it's not like if you're an entrepreneur, we don't want you to be a tax expert, but just be aware, right? Like you said, discover. Let's be aware. Let's discover these credits. So you as an entrepreneur have the knowledge to go to your accountant, to make the right decisions, right? And this is one of them right here. You know, why not think about this in the next 3, 4, 10 years as you plan to scale up your company?
100%, man. And me and you both know, Tony, it's not easy having a business, right? It isn't easy. You know, you need a lot of things. You need marketing. You need proper legal work. You need proper accountants. You need proper product, right? And you also need proper advisory and structure and planning on the tax side. That way, when you do start to make money, you're not giving it away. Who the heck wants to make profit if they have to give it away? Nobody wants that. So we got to try and be as efficient as possible, right? And there's different ways to do that, right? So
nice.
So guys, this is probably the most valuable business tax credit that exists right now. I'm going to talk to you about it right now. It's called the Research and Development Credit. Okay, Increasing Research Activities Credit. Okay. This credit could be worth $250,000 on the federal side, and up to $250,000 on the state side, depending on what state you live in. Okay, I've been working with some of these companies that have software that have a lot of developers. I've been working with other companies that have some nanotechnology products that they're spending a ton of money before even making a dollar, right? So here's the thing. If you have a business and it is designed to encourage research, development, right? You're developing a new and improved product. You have a prototype. You're developing or applying for a patent, right? Though you have a huge software that you're building and you haven't put out there, right? You have to ask about Form 8974, the research and development credit. I'll tell you why. 200, they basically take all of the payroll and all of the costs that go into this technology or into this research and development. And, okay, they allow for you to not have to pay the payroll taxes on that, right? So let's say you have $1 million of payroll and a bunch of software developers out there, okay? This research and development, you're gonna have to pay payroll taxes on the $1 million of salary. So this credit right here will be able to reduce those credits, those payroll taxes, up to 250 grand. That's a big deal. That's a higher or 2 or 3 right there, right? And on top of that, guess what? There are a lot of states that also allow for this, and in the state, it is refundable, Tony. Refundable. I literally got a check, okay, for over $50,000 for one of my clients on the state side because they qualified for the research and development credit and it was cool, you know, so I shined with them, right? So you guys gotta know what this is. It's Form 8974 and it's called the research and development credit. Guys, it's not easy to put this together, but it is so valuable that it is worth getting the right tax preparer to help you discover this credit for your business.
And talking about, well, the code, IRS code, looking to motivate certain behavior. So from what I get from this is they want you, the states and the federal government, right? Domestic, right? Hire domestic, have a domestic team, do the R&D, research and development, whether you're a pharmaceutical company, agricultural company, a technology company, you know, they want you in New York or California or Texas, right? Or and in the US, and they incentivize you by giving you these credits. So that's awesome.
Absolutely. And these are things that, you know, companies that are emerging, that have awesome technology, that have awesome innovation, you know, they can benefit from this. And it allows them to continue to innovate and create new products and create new things that will help society. So this is a super cool credit, guys. All right, let's get more general stuff, right? The QBI deduction has been around for a couple of years. This was something that Trump also put through if you have an S Corp, or if you have an LLC, or if you're an independent contractor, right? We're talking about pass-through entities like an S Corp or an LLC, or if you're an independent contractor and you have a Schedule C, the QBI deduction, it allows for you to not have to pay taxes on 20% of your profit. Now, this can also be quite challenging and quite technical, but ask your tax guy. We've been doing this for 3 years now with the qualified business income deduction, and a lot of companies do qualify. Service companies, just as product companies, it doesn't matter. It's called Section 199A, right? So that would be the question that you ask your tax guy. Do I qualify for Section 199A, which is the qualified business income deduction? So I'll give you an example. If you go ahead and you make $100,000 of profit, all right, call it 50. I made $50,000 of profit on my S Corp or my LLC or my C Corp. Guess what? It's not 50, it's 40. So whatever your tax rate is, you can save that. Let's just say your tax rate is 21%, right? You just saved yourself $4,200, right? Because you're not paying taxes on 20% of that taxable income. Super important. QBI deduction, okay? Also call it Section 199A.
Yeah.
Hi, Suhaili. How are you, Olivia? Hi, Suhaili. ¿Cómo estás?
And by the way, just want to let everybody know, I'm sharing all these resources on negozi.com. So if you go to negozi.com, all these articles, like I just added an article, research and development tax credit for you to read up. I'm going to share right now this article on the QBI deduction. We're streaming right into the platform. So if you go to Negozi and you click on play, we could see each other. We could see ourselves streaming right into the platform. So the video is going to stay here for you to go and be able to check it out. And if you're an entrepreneur, that's why Negozi exists. Negozi, negociante, negocio. We want to make entrepreneurship cool, hip, the understanding of knowledge and of taxation. We're going to hold some events in the near future, some mixers for you to connect with other entrepreneurs. But I love it, Will. Thanks.
Yeah, man. Why don't you tell them a little bit more about Ngozi? Because I have two more for businesses, but I want people to know what Ngozi is. I want them to know that I am supporting Ngozi 150%. Tony, give them a little bit of detail about what Ngozi is, because I'm super excited about it, and I'm very happy to be part of that team now.
Yeah, no, for sure. Yes. So you can see my screen here. So Ngozi is a platform for business owners. Think about it as a LinkedIn for small business owners. So you can make a profile, you can have an account, you can connect with other entrepreneurs in English y en español. We add articles, videos, noticias, like this one right here. We were talking about a little bit of the new changes to the PPP loan, so you could kind of read articles. There's also miembros, which we call, nuevos cambios al préstamo de nómina PPP. So it's bilingual, right? So you're going to find some stuff here in English and stuff in Spanish. Our miembros, we call them negociantes, as a play off of the word negozi. So there's over 500 negociantes from across the country. They own different businesses. Some have restaurants, some have tiendas, retail, e-commerce, some are tax professionals, some are insurance, real estate, different entrepreneurs you could meet, you could connect with. We also have events. So right now, a lot of our events are via Zoom. So we're live right now having this event, which is awesome, the top tax credits. But tomorrow we have Wake Up Call Friday, Saturday, Cafecito con Ngozi. So go to Zoom classes to see what's coming up. Next week, we're going to have an attorney talk about visas and DACA. So for our immigrant entrepreneurs, what to expect. We're also going to be covering next week workers' compensation, payroll, and staffing. The week after that, we have Roberto Martinez going over how to show up on Google, Google search. You could put your business up there. So a lot of the classes and the meetups and the chats are about you being able to organize and better administer your business so you could thrive. And we also have like online courses you could kind of go in and dive in. But yeah, check it out. So again, it's a platform. It's a B2B marketplace, right? We want you to learn, get the resources, connect. But I can't wait, Will, for it to have some cool mixers.
Oh my goodness. I need people. I need socialization, man. I'm trying to go to Mama Juana. Please, somebody help me. I need the restaurants back. I got something for restaurants too. Tony, that was awesome. And I want you guys to know that I'm on board with Ngozi at the end of the day. I don't think he does it justice. Really, Ngozi is empowering the Latin and immigrant community to get their business on. That's what we're doing. We're connecting everybody socially, and we're basically the Latin and immigrant version and small business version of LinkedIn and Masterclass. You smash that together and you get Ngozi, guys. Please push it to your friends, your family, your mom and dad, because we do things in Spanish. And cool. Now, next, talk about restaurants. Whoever has a restaurant, if you have a friend that has a restaurant, you have a family member that has a restaurant, they need to know that $29 billion was just approved, okay, by the new administration to be funneled through the SBA to support restaurants that are small, okay, not these large ones. $29 billion. And what they're doing is they're trying to pay the restaurant workers, the employees of smaller restaurants. They're trying to give 70% of their wages to the restaurant so that they can keep them employed, okay? So you have to really understand and talk to your guy about the SBA new guidelines around the $29 billion stimulus package going to smaller restaurants so that you can apply and get it. All right. Two more, right? Number one, if you guys have a business, okay, I can't stress this enough. All right. I know a lot of business owners. I am a business owner myself. Right. The worst thing in the world is to be able to run your business and you're happy and the most beautiful thing is when you're controlling your own time and you have your business, you have your clients, you are grinding every day and it's growing, right? But you're not putting anything away for your retirement. Why? Because you think it's too complicated, right? Because when you worked, you had your 401k. And when you worked, maybe you had a pension. But when you own your own business, no. You got to figure that out, right? Well, let me figure that out for you. Let me give you a really simple solution. It's called a SEP plan, guys, a self-employed pension plan, okay? The self-employed pension plan allows you to deduct, actually it's a credit, to take off of your profit of the business the amount that you want to put in your retirement, okay? The maximum is $55,000, I believe. Tony, check me on that. That, for example, let's say you have a business and you make $55,000 and you decide, nah, you know what? I want to put it away from my retirement. You take that $55,000, you put it in your SEP plan, okay? Put it in your SEP plan, your self-employed pension plan. Guess what? Your taxes are going to be zero, right? If you own a business, you need to understand what a SEP plan is and how much you can contribute to that at the end of the year, right? Or during the year or whatever, because you're going to end up, there you go, 25% of compensation or 58,000. Thank you, 57,000 for 2020. Super important, guys. You know what it is not to pay taxes on $57,000 as a business owner and be able to take that and put it into a non-taxable account that grows without paying taxes either? That's smart business, folks. That's smart business. Even if you can't do the 57, but you could do 20, that's smart business. Taking it, put it into a self-employed pension, non-taxable account that's also growing tax-free, that's good business in any way you cut it, all right? So if you have your own business, please keep that in mind. How are you going to fund your retirement? You're going to fund it through a SEP plan, a self-employed pension plan.
Nice.
All right. And I think we're good. I just want to let you guys know, breaking news as well. A little bird told me, right, Tony? I didn't even share this with you because I wanted to keep it in my pocket, right? A little bird told me that the business tax rate is no longer going to be 21%. You can forget about that, right? It went down to 21% when Trump cascaded all of his changes, right? That's gone, right? That's about to go really quickly. If it ends up being that end of this year, I would be surprised. You may hear this in the next 90 days. The tax rate was reduced to 21% flat with Trump. Before that, it was over 30%. It was like 35%. So expect the business tax rate to go up. Now, what does that mean? Ready for this? You should not be taking accelerated depreciation when you're only paying 21% for your corp. You follow me, Tony? If you know that the tax rate is going to go up to 30 and 35%, you don't want to take accelerated depreciation while it's at 21%. You want to take accelerated depreciation after the tax rate goes up, which I just told you is most probably going to happen. So if you own a business and you're doing your taxes for 2020 and you have the option of doing accelerated depreciation, which means you bought a big machine or you bought something big and you want to take it that year because you don't want to pay 21% on taxes, guess what's going to happen next year? Pay 35% on the tax.
Oh, yeah. So let's dive into that just a bit. So if you have a business and you have some big machinery or an asset for the business, you typically say it's, $300,000, this asset that maybe you're a restaurant, you buy some machinery or you're a manufacturing plant, but you typically say, oh, it's a business asset. Let me take a deduction. So, keep it really simple, right? Let's say you buy a notepad for your business. It's $2. Oh, you take a deduction, but it's not the same when it's more. When I believe the definition is when the life of the asset is more than a year, you can't just deduct it. You need to depreciate it over time. Right. And in essence, it means you take a little bit of a deduction every year over year, depending on the type of asset. So that's typical, but there's something called accelerated depreciation or bonus depreciation. How does that work? If you want to break it down a little bit.
So what happens is with bonus depreciation, the IRS allows you to take up to I believe, don't quote me, it's a high number. It's like $700,000. If you buy something big like a car or a machine, the IRS is actually going to allow you to take that deduction entirely in 1 year, dropping your taxable income all the way down, right? It can't get past zero, right? So you can't bring it into a loss. You would have to take it the following year. It continues to roll, right? So what does that mean? I have $100,000 of profit. Hello, Virginia Coffee. How are you? Wow, I haven't spoken to you in forever. I love you and your family, Coffees. What's up? That's my little league coach's wife. That's who that is. Amanda, what's up, cuz? How are you? Ari from Miami. How you doing? What's up, baby? All right. So back to super important. This conversation came about because it's almost a fact that the tax rate for businesses is going to go back up from 21% to something past 30%. It's already been around. It's already rounding the little tax world community that we have. And it's going to most probably happen with this new administration, right? What does that mean? A lot of people take bonus depreciation in order to drop their corporation's taxable income by saying, hey, I have $100,000 of profit, but I bought a huge machine and that machine cost me $100,000. Normally, you would have to take that machine and divide it by whatever the useful life of the machine is, right? Which means you take the $100,000 and you divide it, let's just say by 5. So you're able to take $20,000, $20,000, $20,000, $20,000, $20,000, right? But if you do bonus depreciation, you're able to take the whole $100,000 in expense in year 1, right? But guess what? Why would you do that in a year when your tax rate is only 21%? When we already know, because Will the CPA told you that it probably is going to happen, right? Wait, where's my lawyer? Right? No disclaimer. We got a disclaimer. That next year is probably going to go up. So guess what happens? Next year, you're not going to have anything, right? Maybe you're going to have to buy something else. So my suggestion is if you're taking bonus depreciation to try to lower your tax rate for this year, you got to really figure out what's going to happen next year when your rate goes from 21% to 35%.
Because what you're saying is, assuming that it does go up, which it looks like it's going to be the case next year, the year after, there's going to be more tax to pay.
That's right.
So you want to have something like a deduction or depreciation to lower that taxable income or that tax. Right. So if you use it all up this year, next year arrives and you're like, oh man, there's more tax, but there's nothing, there's no deductions to eat it up. So that's right. What's going on, right?
That's exactly it, right? So you're going to want this bonus depreciation on the years where the tax rate is higher, right? That's the premise. And the tax rate is going up, not down. So you got to kind of figure out, when should I take my bonus depreciation? Should I take it now? No, because the tax rate is going up. If the tax rate was going down, then I would say take it now. You got to take it now because it's 21%. Next year, it's only going to be 9%. Oh, right? I don't mind paying 9%. I don't want to pay 21%. So the idea is when the tax rate is going up, you want to save your bonus depreciation for the times where the tax rate is high, which is not now. We all know that it went down from 35 all the way down to 21.
Was that the case, Will, like right before the Tax Cuts and Jobs Act came into effect, that people were like taking the bonus depreciation the year before? Because it dropped it, at that point.
That's right. So they were taking the bonus depreciation when the tax rate was at 35% because they knew the following year was going to be 21%. So they were like, I'm taking this now. I'm not doing it. So.
Cool, man. Love it.
Yeah, man. All right, Tony, you got something? Because I'm about to, it's dinner time for me here in New York City. What are you guys doing?
Yeah.
Kern, what's up, Kern? How you doing? Kern from Florida. My man, Kern Williams. What's up? So I just want to let you guys know, I appreciate you guys coming and hanging out. Me and Tony are testing different things. Maybe next time we'll give everybody the Zoom link and let everybody kind of hang out. Tony, if you guys have any questions, you can go ahead and put them in the comments and I'll answer one or two of them if you don't mind. But if not, right, we could also remember all of this content is going to be on Nagozi. You can go there and remember the 3rd D. We're going to do a deep dive in all of these credits. And for the people that came in a little late, I'm going to run them down. Maybe they could write them down really quick. All right. Gracias, Ana. Gracias, Ana. So we got first one, the adoption credit, right? Remember, if you're adopting a child, there's a credit out there for $14,300. Okay. So if you have something in mind or a family member is doing adoption, it's $14,300. All right. The child tax credit is going up this year to $3,600 for every child that's under 6 and $3,000 for every child that's over 6. Remember, it's an advanced credit, right? They're trying to give you half of it this year and then half of it next year. Super cool. If you're going to school or if you have a child that's going to school, you have the American Opportunity Credit that's worth $2,500 per child, and the Lifetime Learning Credit, which is worth $2,000. And that's for you, not necessarily for your child. The recovery rebate, if you didn't get your stimulus check, remember that you could always post it on your recovery rebate on this year's taxes or next year's taxes to make sure you do get it because you are entitled to it. Can't stress enough the credit for this for family leave or sick leave for the self-employed. Super important. It could be $15,000 per person. This is for everyone who's in the gig economy, who's an independent contractor and got sick and couldn't work. Okay, or if their family member got sick and they couldn't work because they were taking care of a family member. 15 G's, guys. All right. That is Form 1040, line 3, Schedule 3, line 12B, guys. Super important. All right. And Form 7202, don't forget that. That's important. Let's see what else we got important. Oh, when you have your solar panels, don't forget that's right now, that's 26% of the cost of your solar panels is a federal tax deduction, and that doesn't include the state. If you're going to do it as soon as you can, because next year that's going to go down, and the following year is going to go down again. Okay, Ana, pues gracias a los negociantes.